Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Mitri Pargamanik. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. And before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. There's a disclaimer.
Excellent.
And that, let me share my screen.
Can't keep a good market down, that's for sure.
No, that's for sure. And
Oh, man.
if you guys are joining us for the first time, Will and I, we do this show in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, you could type it into the live chat on YouTube. Will's watching it and he'll read it back to me. And before we get started, to give you guys a couple minutes to put those questions in, we'll take a look at the pre-market report, see if we could get insights, what's going on in the pre-market hours, and then we'll move on to the questions. So let's start out with the pre-market report. These are stocks trading in pre-market. Up here at the top, we have a calendar view that does allow you to click on a historical date, and that will bring up what happened in the pre-market on that date. So far today, we're on November 30th. And up to now, we could see that there are 569 stocks trading higher in the pre-market hours, 244 stocks trading lower. As far as volume goes, we got 147 million shares trading on up volume versus 70 million on down volume. And if we convert the volume to dollar value, we got $2.5 billion worth of stock trading higher, $438 million worth of stock trading lower. So this is what you're mentioning, Will. So far, the market is looking like it's trading with some bullish sentiment, bullish enthusiasm in the pre-market hours. And I think, we had, have some inflation numbers come out.
Everything looks like it's slowing down. I guess that's bullish.
The prices are slowing down. And now I think that, Wall Street traders are lining up, anticipating the Fed might cut, right? The interest rates and what happens then, we inflate again, perhaps. But that's what it's looking up from the high level. Let's look at it from a couple more angles, and then we'll go to the questions. Down here, we have a list of our most active stocks in the pre-market hours, the biggest percentage gainers and the biggest percentage decliners. I see 98 stocks made our biggest percentage gainers list. 35 stocks made our biggest percentage decliners list. So these are stocks that are trading in pre-market hours, but must meet certain thresholds that we set, as far as liquidity, price change, volume, and so forth, because stuff in the pre-market is usually very liquid. But from this perspective, also points to a more positive trading in the pre-market hours. If you look at it, though, we do have small cap stocks that are in this list. We have ETFs, leverage products, any security that's listed on a major U.S. exchange. If it's trading in pre-market hours and meets our liquidity thresholds, it will make this list. To narrow down to a small group of stocks, we could use the filters above. If you do have a watch list, you can filter by your watch list. It's this filter over here. In this example, we're going to use this filter in ETF. I'm going to drop it. By clicking on it, you get a drop-down menu. Let's select SPY, which is the S&P 500 ETF. And when you do that, the list below gets filtered by stocks that are holdings in the SPY, and these are the S&P 500 constituents. Here we see that there are 17 stocks in the S&P 500 that met our threshold and made our percentage gainers list, one on the decliners. So that also indicates that the trading in the pre-market hours is leaning towards that bullish side, bullish bias. So we gave it a couple minutes while we covered some of this pre-market. If you have questions, I'll go to the questions now.
No questions have popped up this morning. There was an interesting comment right before on CNBC before we came on.
Okay.
I don't know if there's a spot on the site we can look at it. I know we can look at the ETF profile to see how much the Magnificent Seven make up. But the comment was that the Magnificent Seven, let's say, make up, I don't know, I'm going to throw a number out there. It's probably off, like 28-30% of the S&P 500, the market cap.
Yeah.
And yet their earnings are only like, let's say 4%, where
right.
They were talking about the energy companies are like, I don't know, like, let's say 7% of the S&P 500, but their earnings are like 12%. It was just an interesting dichotomy between what companies are earning in a sector and
right.
how much of their underlying are owned by the marketplace. It's interesting.
Yeah. And here, I'm just going to the SPY, S&P 500 ETF. I'm looking at their top 10 holdings. And these are the symbols, top 10 holdings. You see Microsoft, Apple, Amazon, Nvidia. All of these top 10 make up right now 31.8% of the S&P 500 index. So the S&P 500 index, it's a cap weighted index. So the higher the cap, market cap of a stock, the more the more weighting it has. So for every dollar invested in that index, it gets a bigger portion of that dollar, right? Because it has a bigger weighting to it. So the higher it gets, the more money pours into it as well, because it's cap weighted. So you could see here that these top 10 make up 31%. And if we look even closer, right, even if we look closer at these, they probably make up a bigger percentage because Alphabet, which is Google, shows up twice in there. They have two different classes of stock. So, so if we treat that as really one company, then you got 9 companies that make up 31.8%. And then if we dig a little bit deeper, we see Berkshire Hathaway in there. And Berkshire Hathaway is kind of a holding company, right? They own other companies.
Yeah, they own a lot of Apple and Microsoft, I think.
Yeah. So even within this company, you're getting, they're holding lots of these stocks. So you got like, let's say less than 10 top 10 companies are making up, a third of the entire index. And this keeps getting growing. Like this number just keeps going up because these are the stocks right now that are driving, most of this gains. So as it's going up, as these stocks are going up, they're actually receiving more and more share of every new dollar invested into that index, right? And I think that's what's happening now. I think the QQQ may be even more skewed than this. So let's take a look at that. Let's just since you mentioned it, the QQQ NASDAQ 100. Oops. Let me go to that. So the QQQ, you can see here, these are the top 10 holdings. So you got Apple, Microsoft, Nvidia, Meta, Broadcom. Google shows up twice. So let's just, say top 9, right? Make up almost 50% So 50% of the NASDAQ 100 is in the top 9 companies, in that QQQ index, or ETF. And that's the thing with the cap weighted, right? That the bigger they go, the bigger, and it's not based on, earnings or revenue. It's based on the market cap valuation of the companies, right? So you think like some of it has to do with their revenue and earnings and so forth, but the way that these dollars are allocated, once when you're buying the indexes, when you're buying the ETFs, when you're buying even the mutual funds that track the S&P 500, well, those baskets need to be created, right? Like you buy SPY, you buy QQQ, these things get created. You could create more of them. So if there's a big demand for these ETFs, well, what happens is that the issuer creates more units. And to create more units, they have to go out and buy the baskets, right? They have to go and buy these shares. And when they do that, right, when they do that, they allocate it based on these weightings. And you could see that these weightings will go up as long as the market caps here are rising, faster than the other market caps. So, yep, now you could see here, just this, the QQQ, half of it is in the top 10 companies.
Very interesting. Very interesting. No other questions, Will. See if we can review how to set alerts on the watch list talked about yesterday. Thanks. Mike is asking GMO, Will, see if we can review how to set alerts from a watch list that was talked about yesterday. Thanks. I mean, you and I discussed this. I don't think there are any alerts we can set on the watch list. Am I correct on that? Or
yeah, the watch list
from a watch list, what would you ever be alerted to?
Yeah, it's not an alert system like some people may be using alert systems. I don't know, that they get a text or an email or some, but the watch list itself is not an alert system. It's just a place where you could go, right? So here's on the watch list. So remember, we discussed this yesterday. It's a place you could go where you have these organized lists, right? You have an organized list of a watch list based on some kind of criteria that you set, like say a sector or basket of goods or some kind of criteria that you picked out, and you wanted to organize them in a watch list, and then you could go and see how that basket is doing or how the stocks within that basket is doing. And you do have different types of data elements, as you could see here, dividends, earnings, price performance, options.
Yeah, I think the great thing is you can put it into the screeners, right? You can drop it down into the screeners.
Right. And then you could use those because now you have a saved list of stocks, right? With a name. So you designated a name. And now you have this saved list of stocks. Let's say the top 7, Fab 7, right? Let's say that's the list of stocks that you care about. And since you only care about that list, now you have it saved, and you could use that list, right, as a drop-down selection in anywhere you go. Let's say you want to go and look for bull put spreads, right? Well, if you're looking for bull put spreads in a screener and you have certain criteria, right, you could use that. You could pull it down, right? Let's look. So over here, I'll pull down my here I have S&P 500 sectors, right? So I'm going to select that. So I have that S&P 500 SPY and all the sectors that make up the S&P, right? So all the ETFs that make up the S&P. So you could see here SPY and so forth. And let's just say within it, and this is all I care about. So this makes it easy. I don't have to, look through each symbol. And let's just say, show me the best theory, show me the best put spread if the stock is flat. If the stock is flat, I want to see it by best return. So I click on that, right? And now you could see I have for each one, right? SPY, XLE. So these are the sector ETFs. Some of them showed me two because they're two tied. And this is showing me based on best return if flat. This one I was picked the wrong one. So if the stock is flat, which means that I have this expiration December 15th, right? So for December 15th expiration, so you can see here, these are all put spreads for December 15th, expiring December 15th. What this is saying is if the stock is at the same place it is today, meaning that it didn't go up, it didn't go down. If December 15th, we're right at the same spot as today. And I'm looking for a spread, an option put spread that will profit from that outlook, right? If that's what I'm looking at, profit from that outlook, show me which option spread will return the most on the money that I have at risk, right? So here's a dollar put spread, December 15th, the 452, 451 put spread. It found that, you could sell it for 35 cents. Well, if you sell for 35 cents, what are you risking? Well, this put spread could be $1. You're risking 65 cents. So you stand to make 35 cents, right? Because if both puts expire worthless, that's what you make, 35 cents for the credit that you sold it at. And if both, and what were you risking? Well, you're risking that if the SPY drops below 451, this put spread's worth $1. That means you buy back for $1, you sold it at 35 cents, you lose 65 cents. So in this case, you're looking to make 35 cents for risking 65 cents. So that's a 53% return. All right. So what it did is in SPY, it said, based on that criteria that we set, best return if stock is flat, December 15th expiration, we're only looking at my watch list, right? So now, because I don't care about the other stocks, I only care the ones that are in my watch list, right? The other ones I don't care for. So this now it's an easy way to really quickly just screen by the stocks that I care. And now you could see here, now I got for each one, I could compare in my watch list, what would they return? What would these return if the stock was flat? And then I could continue adding other stuff to it. Like what if I want, on top of that, what if I need a 2% cushion to break even because I think, well, the market could fall 2%. So if by December 15th, I feel like, hey, we're going to be flat around here, maybe drift higher, but if we go down, I think we got like a 2%. Let's say I think we have like a 2% decline here. So I need a 2% cushion. That's where I need that just in case. So I put 2% cushion. So it's going to go retrieve everything for me and say, okay, so here's SPY, the 444.45. That gives you a 2% cushion. The stock's 454. So that's a 2.1% cushion. So from now till December 15th, even if SPY declines, right, this still has the put spreads far enough out of the money, and with this, including what you're receiving as a credit, it's far away that you still have that 2% cushion if things go against you, right? And it has a 19% return on the money at risk if the stock it really has to be above that strike, right? The 445 strike. Okay, and then you could compare it this way. So the idea is that your watch list is not only like something that you could track like for certain things like we saw, but you could use that list around the website, to do further research, with news, with like we just discussed here, looking for certain strategies, looking for other things. Let's do one in here. Let's go to stocks. All right, in the stock screener. I think we talked about news yesterday, how to screen for news. But let's say we're in a stock screener, and the first thing we want to do is say, okay, go to my watch list, and I'm only interested in the S&P 500 ETFs. All right, so now I have all the S&P 500 ETFs in here. And now, I have all this data I could look at, right? But if you wanted to look at, well, show me ones that, I don't know, have a dividend yield over 3%. So there you go. So there are 3 of them that have a dividend yield of over 3%, right? So here it is. Energy, utilities, and the real estate sector. Okay. So that's the idea behind this, is that you could, create a list of stocks that matter to you, that you're doing it for whatever reason. It's either, these are the only stocks you're willing to consider. These maybe there are stocks that you look at because they're in a certain sector, or you created your own sector. A lot of people do that, so a lot of people might be interested in AI, right? And then they'll look for companies that they believe are best positioned in AI and only monitor those, for example, or other sectors that you want to create yourself because you have a different criteria, right? You might say, well, I only want AI, but I want a certain market cap or whatever it is, and you create that list. And this allows you to use that list to run it through different analysis.
Perfect. We're right up against the opening. We had a new user today, or
Yep.
new person came on and asked, is it possible to make a iPhone or iPad app for the website, was his question. I did ask what would he want on the site, and he said the same thing that's on his desktop. So all the same features, just in an app.
Yeah. So MarketChameleon, it's not a execution system, it's a research tool. And being that it's a research tool, you're usually looking at, data and information and analytics and metrics from different perspectives that you probably don't even want to do it on your cell phone, because it's research, right? You're trying to find answers, and there's so much you could put on a mobile app, right? A mobile app it's good for scrolling, or maybe even doing a certain thing like executing a trade or buy or something like that. But this is more looking deeper into your important decisions before you make, investments or trading decisions, right? These are important. Like, think of it, you're risking capital, right? That's what you're risking capital and trying to figure out answers to important questions. And there's so much you could put on a mobile app, right?
Yeah, well, like the screen,
Uh,
and we've worked hard to improve the functionality on the phone.
yeah,
I know it's way better than when we started. I mean, so the functionality is there. I mean, obviously you have to go to the web and
right,
grab it, right?
right,
But I mean, like the screeners, right? A lot of people use the screeners to
right.
try to create a screener with all the functionality to sit on your phone is,
It's
you know,
not possible to use some of
yeah,
these functionality. Yes, so there are certain things we could put on. We have a mobile friendly phone that there's certain things like you could reference stuff on your mobile that we'll put on there, but you can't put all the function. There's certain functionalities you can, certain you can't. Just because the mobile device is more limited screen space, more limited. What you can do.
yeah.
So
That's why I asked what functionality would he want, because there
yeah,
are things that maybe would be helpful on the phone if you were scrolling that would
right.
connect to your desktop at home and save and I'm not sure, but it would have to be something
Right.
way different than just the whole website, because the whole
Yeah.
website is
It's a
uh
place to go do
yeah.
research, look things up differently, run different analysis, maybe answer questions. And y- you know, I know like mobile devices sometimes they come in because it's easy to do an execution, for example. And we're not an execution system, but it's easy to just buy and sell stuff, right? That the mobile device is great for that if you already know, you know, and you don't want to do impulsive buys and sells when you're trading stuff. But um that for that part, certain actions that you could take, a mobile device is good. But as far as doing, research, where you want to change parameters, want to look at it from different angles to maybe screen things out, it would be difficult to do it from your mobile device. At least we wouldn't be able to look. Here's a stock screener, right? That we're looking at. How would you put that? You could see how many different filters you have. If you start out unfiltered, even unfiltered, you're starting out with what, 11,400, choices there. So, you can see just the vast amount of data, the amount of um, stuff that you look at. You need a bigger screen, probably even a more powerful machine. Um, but
Yeah, and I mean, I don't use an iPad, but I would think on an iPad it would work pretty well, but I don't know what the
some stuff on an iPad, yeah. And again, there are things that might work well in there, may not. We do try to optimize it. It's not an app, but we try to optimize certain features of the website for smaller screens like mobile and app and like iPads.
awesome. All right, we're right up against the opening.
All
Thanks for
right.
the questions, everyone. They are always super helpful. You can always email support at MarketChameleon.com if you have any follow-up questions. Great job, D.
Yep. Thanks everyone for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Trade and peace, chameleons. Everyone have a great day. We'll see you tomorrow.